And now we are finally getting the October jobs report, and it is looking like we ultimately are seeing the unemployment rate come in as expected, but ultimately the change in non-farm payrolls, just 12,000 jobs added during the month of October. That is a massive miss, even according to what was expected coming into this report, 100,000. And then you think about the revision as well of last month's report. Last month we saw 254,000 on the initial print. That was revised lower to 223,000 jobs here. The average hourly earnings growth month over month, that came in about 0.4% here. And then the average hourly earnings year over year came in line with estimates at 4%. But this massively different than what we expected here and lower than what we expected. Just 12,000 jobs added during the month of October here.
Yes, certainly. This is obviously coming in massively lower than what the street had been anticipating. I should say, yes, this is surprising just given the magnitude of how low this job growth is. But again, we could really see revisions come into play next month as we talk about the ongoing impact from the hurricanes and the strike and ultimately what that looks like. Like you said, the prior month was revised lower. Of course, we're also closely tracking the average hourly earnings just in terms of what that could tell us about where we are in the inflation cycle as well. On a month over month basis, you're looking at a rise of 0.4%, which is slightly higher than what the street had been anticipating, in line with what we saw the prior month. On a year over year basis, you're looking at a 4% climb, which is exactly in line with what the street had been anticipating and also flat from the prior month's reading. Labor force participation rate, paying close attention to that as well. That came in at 62.6%, slightly below what the street had been looking for in the prior reading of 62.7%. But again, we very much knew that this was going to be, or this could be, a wild number here. So again, modest payroll gains is what we are seeing. Unemployment, though, which is important, unemployment rate holding steady at 4.1%. And we aren't seeing much reaction yet here in the futures market here. Pretty muted reaction, which was also something that we did expect just given how noisy this number could be.
Yeah, just quickly here, taking a look at some of the sectors within this report as well. The Bureau of Labor Statistics reporting that employment continued to trend up in healthcare and government, but temporary help services that lost jobs. Employment also declined in manufacturing, and they say that that was due to strike activity. There's also a note here on the first page of this report talking about Hurricanes Helene and Milton, saying October data from the household and establishment surveys are the first collected since the Hurricanes Helene and Milton struck the United States. These hurricanes causing severe damage in the southeast portion of the country. They've got more notes within that, but no doubt just an acknowledgement and a nod to the impact of those hurricanes having an impact rather on this report as well here.